Good afternoon and welcome to the marketplace. Coming up in this bulletin, government's beats its 2025 inflation target even before the end of this year, as government institution reveals single digit in the coming month is possible.
We either maintain the budget target or we even drop further to single digit. What I mean is that the Bank of Ghana must still continue to work with the Ministry of Finance to ensure that they implement both monetary and fiscal policies.
But what could be the implication on policy rates, cost of credit and investor confidence? We'll engage a financial expert on this shortly. Also coming up, COCOBOD settles some 2 billion cedis in coupon payment to investors of restructured bills, a move expected to improve its financial position to aid cocoa purchases. My name is Winston Taki. We have these and more coming up in this bulletin. Stay tuned. And as our first business story, government has beaten its 2025 inflation target of 11.9% 3 months ahead of schedule, as the rate for August inflation to 11.5%, the lowest since October 2021. The Statistical Service says the drop forward by falling food prices, transport fares and services marks 8th consecutive month of decline and even a deflation between July and August, offering households room to save more money and spend wisely. James Ishan has more in this report.
Government in the 2025 budget was hoping to end the year with an inflation rate of 11.9%. However, with 3 clear months before the end of this year, government has already achieved this feat. It's coming after inflation rate for the month of August dropped marginally to 11.5%. The Ghana Statistical Service notes the drop was fueled by declining price of food, transport fares, and other services over the past month.
What I mean is that the Bank of Ghana must still continue to work, with the Ministry of Finance to ensure that they implement both monetary and fiscal policies to contain inflation. I mentioned that one of the big drivers of inflation is fiscal consolidation. So government must continue on its fiscal consolidation trajectory. If we see very significant deviation from the path we have seen with regards to fiscal consolidation, for example, if you begin to see significant fiscal expansion, that may not bode well for the disinflation path we are seeing. So government must continue with its fiscal consolidation program.
The data also showed all the regional inflation numbers were driven by transport and market assets. The decline is the lowest Ghana has recorded since October 2021 and the 8th consecutive declines this year. Again, for the second time this year, there has been a deflation from July to August 2025. This means during that period, general price levels of goods and other food items went down by more than 1%. For instance, the decline in the price of herrings and vegetable oil also played a significant role, reducing the national inflation to this new level. The Statistical Service believes the significant drop in the inflation rate over the past year could demonstrate that programs aimed at slowing the rate is actually working.
So we should continue to implement programs and policies that will keep the exchange rate stable for the rest of the year, so that at least items that are imported into the country don't see significant price jumps. But there's also indirect relationship. Even if the items are not imported and they are locally produced, but their inputs are imported, exchange rate can still, affect it. We either maintain the budget target or we even drop further to single digit.
The Ghana Statistical Service believes the current inflation numbers should offer an opportunity for households to save more and shop smarter.
In another development, COCOBOD has settled some 2 billion cedis as coupon payment to investors for its restructured cocoa bills. George Biafe has more in this rest of the story.
We understand the set payments were made on Monday. These are cocoa bills that were issued by COCOBOD. However, during the debt exchange program, these instruments were reworked into new bonds for the commercial banks. It also afforded the Bank of Ghana at that time to pay all individuals that were holding these bills. The new bond financing deal has also been supported by local banks in the country. COCOBOD has given the firm assurance that it will settle the remaining coupon payments of 1.9 billion Ghana cedis due in 2026 and 2027, as well as the principal amount. For some, the development couldn't have come at a better time, as COCOBOD is currently taking some measures to turn around the company, clean its books, and reduce its debts. This should put it in a strong financial position to secure fresh funding at an affordable rate, a move that could aid in the purchases of cocoa beans for the next crop season, as well as improve this credit ratings. It is already expecting more than $4 billion in fresh inflows from buyers under a new financing deal. Development should help meet its cocoa obligations to farmers and help improve the country's reserve position, as well as the stability of the Ghana cedi.
Now, for more on this, as well as our discussion on inflation, I have been joined in studio by Nelson Kujo Kwagbeji, Head of Finance at Melbourne Capital, for some analysis on this. First, he's here with me. It's good to see you, Nelson.
Good to see you too.
Great. What do you make of the restructuring that is currently happening at COCOBOD, and also its implication on the operations of the institution?
All right, thank you very much for having me. I think that the cocoa sector and the energy sector are two sectors that are so much saddled with debt. And so during the debt exchange program, the cocoa bills were converted into bonds. And so that was supposed to give the government a much longer tenor to be paying the coupons and even the maturity amount. And so it's good news for investors who invest in the cocoa bonds. And I think that it's going to reignite investor confidence. As your reporter rightly indicated, COCOBOD will be going back to the market to borrow about $4 billion in fresh funds for their next cocoa season. And so to the extent that they've been able to honor their obligations, it's going to reignite confidence within the cocoa sector and, for that matter, their financing mechanisms.
Interesting. Will it have any implication on our ratings outlook as a nation?
Well, to the rating agencies normally rate companies and sovereigns because of their credit worthiness. And to the extent that they've been able to honor their obligation, it means that they are credit worthy. And so once they go back to the market, I don't foresee any challenge in terms of they raising fresh funds for their operation for the next cocoa season.
Interesting. Now, for 8 consecutive times, we've seen inflation decline. This recent report, 11.5%. What do you make of the fall?
Well, it is actually expected. I mean, there are two major factors that are driving the disinflationary pressure. The fact that we are still under the headmaster, the IMF program, is one factor that is actually helping. And the second factor has to do with government-owned policies. When I mean policies, I mean both fiscal consolidation policies and the monetary policies of the government. You have seen that during the media budget presentation, the finance minister made mention of the fact that this time around, there is a coordination between the fiscal authority represented by the Ministry of Finance and the Bank of Ghana. And so all the fiscal consolidation measures that the government is implementing since they assumed office are yielding the right result. And the strict monetary stance taken by the Bank of Ghana are all contributing towards the disinflationary pressure. But the only issue has to do with food inflation. We have realized that food inflation keeps on driving the inflationary pressures. And so these are not just data that are released, but they are data that are released to informed policy decisions. So I think the government has to look at the agriculture sector and make certain strategic investments in agriculture in order to curb down on food inflation.
Right. Now, we've seen the last time the policy rate was reduced by a high 300 basis points. As of now, what do you believe this new figure projects for inflation, also the current Treasury bill?
All right. Now, when you read the concluding part of the Bank of Ghana's report at the end of the last MPC meeting, the governor made it clear that they will continue to monitor the disinflationary pressures. And so if the need be, they will further cut down on the policy rate. Now, inflation is at 11.5%. Monetary policy rate is at 25%. That is still high. It will make cost of capital too expensive. And so going forward, and during the next MPC meeting, I expect the Bank of Ghana to cut down on the policy rate by some 300 basis points in order to make cost of capital cheap. In fact, the policies that they have implemented have yielded the right result. End of year inflationary target is 11.9. August ending, we have achieved 11.5%. And so the time has come for the Bank of Ghana to further cut down on the policy rate. Now, when you look at the inflation rate compared to that of Treasury bill, government for the past 4 consecutive auctions, government has been registering under subscription. It's basically because of the rate. I mean, nobody wants to go and invest in a place where there will be negative real rate of return. And to the extent that inflation 11.5% is more than the 91-day Treasury bill, which is around 10.something%, government will continue to register under subscription. So I think that inflation needs to go down further in order for more activity to be provoked within the money markets.
The previous slide, I saw some very interesting dynamics there, which has to do with the Treasury bill.
Yes.
It appears it's been quite undersubscribed.
Exactly.
3 consecutive times, until recently where we saw a bit of over 10, between 10 to 19, the rate benefits there.
Exactly.
What is the return on investment going forward for?
Well, as it stands now, if you look at the 91-day Treasury bill, you realize that it is at 10.29%. In fact, it's within the 10% region. Now, inflation is at 11.5%. So when you invest in the 91-day Treasury bill, it means that your returns is negative. However, if you consider the 182-day Treasury bill and the 364-day Treasury bill, they are marginally higher than inflation. And so you may make some gains in this regard. But I think that we need to drive down further inflation in order to provoke a lot of activity within the money market, because the money market is a liquidity market for both investors and the government.
Now, certainly, how does this outlook based on the numbers that has come up, inflation, we've seen interest rates, how does it impact ease of doing business, basically?
All right, so when cost of capital is high,
yes,
it means that we can't expand the economy. Now, Ghana reference rate is around 19%, I think, which is still high. And once you have a reference rate which is high, the banks will add on their premium. And so it will make cost of capital very high for businesses. And if you want real development, it's not a development that is led by the government, but a development that is led by the private sector. But how will the private sector grow? They have to have access to cheap source of funds in order to expand their operation, create jobs, and expand the economy.
Interesting. What other information do you have for us?
Well, we have here the credit rating. We have seen that over the years, we have not been rated favorably. In fact, in 2021, we were rated B-, which is highly speculative. In 2022, we improved a little bit to C, which is a D, not improvement, which is a default eminent. We have the overall, restricted default in 2023. Then in 2024, we went up a bit to CCC+, and currently we are doing B-. Our expectation is that going forward, looking at how the government is managing the economy, we expect the international, rating agencies to actually improve on our rating with positive outlook. And so we expect that the next time any of the 3 rating agencies will rate the economy of Ghana, we expect an improvement because the fundamentals are a bit stable. We have enjoyed relative stability in terms of our currency. Inflation is coming down, and most of the macro and fiscal economic indicators are doing well. And so we expect the country's rating to also improve in that regard.
Interesting, and this dynamics points to a very positive outlook for the economy as going into. But before we go, are there certain risks that government should be cautious of?
Yes, I mean, for the risks, they are still there, most especially the externalities. Our economy is heavily dependent on export of commodities. And so if tomorrow the prices of gold or the prices of crude or the prices of cocoa fall, it means that it's going to affect our inflow. And so those, vulnerabilities are there. And finally, we need to manage our currency very well because of late we realize that the CD has depreciated marginally. In fact, we were just told just a few hours ago that Ghana's currency for the third quarter is the worst performing currency in the world. It's as a result of some of these vulnerabilities. So I think going forward, we need to rake in the needed forex in order to stabilize our currency.
Thank you, Nelson Kujo, the head of finance at Melbourne Capital. Before we go, we have information coming in that a surge in demand for dollars by companies paying for imports before the year-end holiday season has ended the Ghanaian cedi's world-beating performance. According to data from Bloomberg, the currency of Africa's biggest gold producer weakened by 13% so far this quarter, the biggest decline globally. That's erased some of the cedi's 50% gain that was underpinned by stronger bullion price, and so it's ranked as world's best performer in the 3 months through June. The cedi traded at 0.1% weaker at 11 cedis 95 pesos per dollar by 1:50 p.m. in Accra. On a year-to-date basis, it gained 23%. We have more business update for you right after this break. Stay tuned. Welcome back to the marketplace. My name is Winston Taki, and now to more news. In a move to combat youth unemployment, over 550 young people in the 11 Bono East constituency have been enrolled in the regional version of the National Apprenticeship Program. The initiative will provide a monthly allowance and startup capital for the youth upon completion, as well as other incentives. And Nasabit has more in this report.
The regional launch of the National Apprenticeship Program here in the Techima municipality of the Bono East region is more than just a ceremony. It is the first day of class for a new generation of entrepreneurs. The program, a flagship initiative of President John Dramani Mahama, is designed to tackle youth unemployment head-on by providing hands-on skills and, crucially, the means to use them. The model is simple but powerful. Trainees will learn directly from master craftsmen and women, but unlike traditional apprentices, they will receive a monthly allowance to support themselves during their training. And the real game changer, once they graduate, they won't be sent out empty-handed. They will be given startup capital to immediately establish their own workshops, salons, and enterprises. Bono East Regional Minister Francis Osuanchi noted that the program will create jobs for the young people who have been shortlisted.
In fact, I must take this opportunity to thank the President of the Republic of Ghana for this opportunity. It is not for only Accra people, but Bono East, we've also benefited. The assurance is that our people are going to make sure that they utilize this opportunity.
Reading a speech on behalf of the Youth Minister, the Deputy CEO of the National Youth Authority, Alhaji Suleiman Mahama, stressed that the goal is to create lasting solutions.
Statistics shows that nearly 1.2 million youth between the ages of 15 and 35 remains unemployed or underemployed, with thousands more entering the labor market every year. They remind us that whilst education is crucial, without deliberate skills training and improved market linkage, many young people will continue to struggle to find sustainable livelihood. It is precisely this challenge that the National Apprenticeship Program seeks to address.
The commitment doesn't just come from the top. The master craftsmen and women who are the backbone of this program have pledged their full support through their representative, Jamila Ibrahim.
As a master craft person, we accept the responsibility placed on us as trainers, mentors, and guardians of the next generation of skilled workers. We pledge to uphold the highest standards of professionalism, fairness, and discipline in guiding our apprentices.
But perhaps the most powerful voice is that of the youth themselves. For apprentices like Yabua Evelyn, this is a lifeline she and her colleagues vow not to waste.
I wish to sincerely thank His Excellency John Dramani Mahama and all partners for giving us this life-changing opportunity under the National Apprenticeship Program. We acknowledge the heavy investment and government and our guarantors are making in us. We therefore pledge not to abuse this opportunity.
So from the government providing the capital to the masters providing the knowledge and the apprentices providing the determination, this program is a three-part promise. A promise that the future of work in Ghana might just be built by the hands of its own skilled and empowered youth. Reporting for Joy News, Anna Sabit, Techiman.
Before we touch on our next story, news coming in is that Black Stars are leading by a goal to nil against Chad, and that was scored by Jordan Ayew. In another development, the National Information Technology Agency, NITA, says it is on course to developing a shared e-commerce platform in 2026, which will host small and medium enterprises which cannot afford to list on the private e-commerce platforms. Technical Services Director at NITA, Solomon Richardson, explained that the platform will run on a 24-hour service which boosts local economies and supports the trade of goods and services and the government's 24-hour economic policy. Here is more from the 4th e-commerce forum and exhibition organized by GIZ.
According to a survey by MasterCard, about 80% of online deliveries operate a pay-on-delivery service, signifying the lack of trust in the e-commerce and courier sectors. To address these concerns, GIZ and its partners are fostering dialogue to build a robust e-commerce sector. Emmanuel Mumuni, component manager at GIZ, shared insights with Joy Business at the 4th e-commerce forum and exhibition.
A successful implementation of our project as GIZ would be to have a heightened consumer trust in our space. We have platforms that are validated and verified to be trustworthy, that people can order and pay online, that we have all SMEs, finding one way or the other to sell online, and that consumers also feel the convenience of buying online.
On his part, Cosmas Anpengwo, Executive Secretary of the Postal and Courier Services Regulatory Commission, stated that the Commission will strengthen regulations combat online trading fraud.
Once it's about fraud, we collaborate with the Cybersecurity Authority to identify who were the deliverers, the courier company that did the transaction. And then we are able to identify whichever fraudster got involved in that transaction. So we heavily rely on the Cybersecurity Authority because we do not have that capacity. We rely on them when it comes to fraud. And then we rope in the Ghana Police Service.
Now, for more business update, visit myjoyonline.com/business, and that is COCOBOD settles $2 billion coupon payment to investors of restructured bills, and also MTN Ghana now shut down of 2G and 3G services. And certainly, this is the update. More insightful stories right there on our website. Before we go, I want you to know we are leaving you on how the city is performing against major global currencies. My name is Winston Taki. Have a good business day. Enjoy the Black Stars. Bye-bye.